Hello everyone, in this video I'm going to talk to you about the loan process for home buyer in California or elsewhere in the United States. Typical involves several steps. Here is the overview of the process from pre-approval to closing. First, pre-approval. Research and compare lenders. Buyers usually start by researching different lenders, banks, mortgage brokers, or credit unions to find the best interest rates and terms. Pre-approval application. The buyer submits financial information to the lender, including income, employment history, assets, debts, and credit score. This step involves providing documentation such as tax returns, W-2s, pay stubs, and bank statements. Credit check. The lender checks the buyer credit score and history to assess risk and determine the loan eligibility. Pre-approval letter. If the buyer qualifies, the lender issues a pre-approved letter stating the maximum loan amount in which buyer is eligible. This strengthens the buyer's offer when shopping for a home. Second, the loan application. Once the buyer's offer on a home is accepted, they submit a formal mortgage loan application. Some lenders may request updated financial documentation. The loan estimate. Within 3 business days, lender provides the buyer with a loan estimate, which outlines the estimated interest rates, monthly payment, and closing costs. Application. Verify of information. The lender begins verifying all information provided by the buyer, including employment status, income, assets, and debts. Property appraisal. The lender orders an appraisal to confirm the property's market value and ensure it supports the loan amount. The appraisal helps protect the lender from overlending on the undervalued property. Homeowner insurance. The buyer must obtain the homeowner insurance policy before closing, and proof coverage is submitted to the lender. Fourth, underwriting. Risk assessment. During the underwriting, the lender carefully assesses the buyer's financial information, creditworthiness, and appraisal report. The goal is to ensure that the buyer meet the lender's standards of the loan. Debt to income ratio review. The lender checks the buyer debt to income DTI ratio to confirm they can manage the mortgage payment alongside other financial obligations. Clear to close. Once the underwriter is satisfied with the buyer meets all loan conditions, they issue a clear to close, meaning a loan is fully approved pending final review. Fifth, final approval and closing disclosure. Final loan approval. After underwriting, the loan is formally approved. Receive a closing disclosure, which provides a detailed breakdown of the final loan terms, closing costs, and cash needed to close. Review and sign document. The buyer reviews the closing disclosures and ensures all figures match the expectations. They must wait 3 days after receiving a closing disclosure before closing on the loan. 6. Closing on the loan. Final walkthrough of the property. Before closing, the buyer typically performs a final walkthrough of the property to ensure it is in the agreed upon condition, and they must go along with their realtor. Sign loan documents. At closing, the buyer signs the final loan documents, including promissory note, deed of trust, and mortgage agreement with the escrow officer. Disbursement the loan funds. Once the documents are signed and processed, the lender disburses the funds to escrow account. The seller receives the proceeds, and the buyer officially owns the property. 7. Post-closing. Loan services. After closing, the loan is either retained by the lender or sold to a loan services company, which will manage the mortgage, collect payments, and handle escrow for property taxes and insurance. The key considerations. Interest rate lock. During the loan process, the buyer can lock in an interest rate for the specific period, 30 to 60 days, protecting them from the rate increases while the loan is being processed. Second, the loan types. The buyer can choose from various loan options: conventional loans, FHA loan, VA, etc. Depending on their financial situation, down payment amount, and credit history. The entire loan process can take 30 to 45 days on an average. But this timeline can vary based on factors such as the buyer's financial profile, the lender's processing speed, and any issues with the property's appraisal. So if you need to get the loan approved or begin to go searching for home, the first thing you need to do is talk to the loan officer and get the loan pre-approval first. And then after you go search for the home and you find the home you like, you put in the offer, it get accepted, and then the loan officer will process and put in the application for you. It takes 30 to 45 days. Thank you so much, and I hope if you need any help, please do not hesitate to contact me. Thank you.